Hi, my name is Layla Andrews and welcome to my weekly analysis for the week commencing the 8th of October 2017. And today I'm going to be talking about GBPUSD and Aussie dollar, AUD USD. So I'm going to start with something a little bit unusual because I usually use MT4 and I've been having to use TradingView for the time being. That's probably going to be temporary, but one of the things about TradingView which is quite helpful is that you can actually look at 3-month charts, so that would convert into quarterly bars, which is obviously rather important in terms of corporate reporting and buying options and stocks and shares and that kind of thing. So just thought this might be quite an interesting thing for everybody to see, which is the fact that in terms of where GBP has come into, we've actually come into a 10 EMA at the 136 level, which is where price came to after its big rally up. Price came to a stop at 136 and has from that point sold off quite deeply, which is more obvious on the timeframes below this one. But for the time being, this is the last quarter of the bar, which ended obviously at the end of September, and we have drawn into, or rather pulled into, this 10 EMA exactly. So that's a good thing to remember, is that EMAs on multiple time frames do cause markets to react. And in the bigger picture of that, that's an element of time frame correlation, but that's quite a large subject, so we're not really going to go too deeply into that at the moment. However, if I go down to the next time frame, you can also see how this is starting to look in a more detailed way, even on a larger time, even on such a large time frame as the monthly. So this being the monthly time frame, you can also see that we have here a 20 EMA, which price has, to be perfectly honest with you, it's kind of taken it slightly into account, but the fact that it ended up closing above it wasn't the cleanest respect of the EMA as I've ever seen. If you see up here, price has been very respectful, and every single time it's tested through, which was here and here, these two, and this one here, it's actually closed well below. So 21 on this point, sorry, the 20 EMA at this point here actually ended up being, there was a change, so it ended up being the line in the sand that the bar actually closed above. So this is relevant to some extent, but mostly this whole area is about respecting the 10 EMA on the quarterly chart. So now we need to talk about what we think might be coming next. Now theoretically, this would have been potentially an indication of a market that may continue on a cyclical basis, at least, continue to carry on higher. However, if we start looking at the weekly and the daily, start to see that there's a rather different look to the market, and this is what we need to take into account. So just as a quick recap as to markets making reversals, something I want to draw your attention to is the rules of trends, which in the case of a downtrend is lower highs and lower lows, and the rules of an uptrend being higher lows and higher highs. So in very simple terms, when you see a market that has changed from being one set of rules to another set of rules, you therefore have a violation to some extent of the trend, and obviously the longer that violation goes on, you then end up with a market change of direction. So as you can see, we were in a downtrend. We've now been making higher lows and higher highs, this being a rather extreme high after having been caught in a little bit of I wouldn't call it a range or a consolidation exactly, but there was something that was quite contained about this price action just here. You can see that the bars swap from color quite regularly, and they never really get going. Even though we've had some quite large green bars, it never really pushed off. But what this was indicative of was a bit of underlying momentum to the upside. Plus also, once you start cycling, which this market was doing, there is going to come a point where that cyclicity is self-fulfilling, and you usually get an extreme move. So in this case, we did get an extreme move, and as I've explained, if we think back to the quarterly chart, we drove straight into the 136 level. Incidentally, it should be noted that the 1.35 level was the psychological level of interest, not least of which is because we'd been here before in a consolidation. So 135 was going to be the point of interest, but as it turned out, it actually wanted to make a complete kind of, I don't know how to describe it, but just an absolute storming move all the way to 136, which is of course the quarterly 10 EMA. Now since then we have sold off quite dramatically, and if you look at past history, which is always a good idea, we've actually had a bit more of an extreme sell-off than we've had in the past, not least of which because the distance it's covered, which has almost negated the entire up move. We've sold off almost to the full extent of the up move, not quite, but that's one aspect. But the other side of it is that we had smaller bars that actually increased in momentum. So that can mean that the sell-off is over, but it can also mean that the commitment to the selling side has increased, i.e. more sellers have stepped in. And it's a case of finding out whether we think this is going to be a point where for a short period of time everyone was all into the selling side and this is now over, or whether we think this is indicative of something else that might be on the cards. So my response to this is that generally markets have to process changes of direction. This being an example of a processing of change of direction, i.e. what should have been lower highs and lower lows was a failure here. Rather than making a lower low than this one here, we actually ended up making a matching low. So this is a change. This is the beginning of the process. And here, of course, was basically the deal breaker because we put in a higher low, which is a violation of the downtrend. So that's what I mean when I say about a process. So we may need to see something occurring in this area before we can actually make a decision about where this market is going to confirm about its next larger move. But based on the 3 monthly, and I think this is important, based on typical processes of selling off, pulling back into an EMA, typically if we were looking at a 4-hour chart and we saw this is generally a selling off setup. After the pullback is finished, you would generally expect to see a continuation of what this was a down leg. You'd expect to see a continuation of that. So in very simple terms, this is something that could be on the cards. So let's go back to where we were, which was the weekly. At the moment, we are at a rather strong decision point, and if I go a little bit closer, you'll see what I mean. So we are now currently sitting on top of a 20 EMA, which has been reasonably okay in terms of respected by the weekly chart. And we've got a 50 coming underneath, which also sits exactly on the rather psychological level of 1.3. So there's a raft of situations, or rather factors, that create this support level here. We have the 1.3 round number, we have the 50 EMA on the weekly, we have the 20 EMA on the weekly. So there's quite a lot of things in place that are at the moment possibly holding this market up. So what would we expect to see on the lower time frames if the market's going to respect these levels? So this is where we go down to the daily, and we can have a bit of a closer look at again further detail. So this is a little bit of a tricky one to call, because this price action is fairly generic. If it had a really long tail, I could argue that perhaps from here we might expect to see a bit of a pullback at least, before then selling off again to actually test 1.3. I'm going to stick my neck out and say that I do think that 1.3 needs to be tested. It's not a given, but it's so near to it that it seems rather illogical that those that are in the market that are capable of making markets move in generally close by in terms of their preferred direction, I don't really see why they wouldn't take advantage of this, seeing as we're quite near. There's possibly going to be a lot of orders at this point, which will either be deciding that the market will turn from here and then go through a separate kind of process, which I'll talk you through in a sec, or if this is going to be broken. So let's talk about the two options. First off, pulling into 1.3, finding support, and then pushing back up. This is something I always talk about. There's two ways in which this could go. The first off being, if this was a fairly steep sell-off, what ends up being a bit of a small buying period may end up being what I would term as the pullback of this sell-off period. And it would be somewhere into the tops here, which could be approximately, let's say 132.70, possibly even as high as 133. Simply because it's a nearby round number. But let's say 132.70 to 133. Let's just say possibly if we're going to start buying up into that area, and I haven't yet decided whether I think it's going to be here that it's going to start doing that or from where it is. But if we found a bit of resistance in this area, we've seen there's a little bit just here. We've obviously got this top to contend with as well. So there's something in this zone, which means if we found that the pullback ended here, then we would then potentially be looking at another attempt to go lower after a pullback. So it'd be sell off, pullback, sell off again. So that's one way in which that can go. And theoretically also, that would also be confirmed as the lower high compared to this. A lower high in this scenario would be a violation of what has been an uptrend. So that's one way of looking at it. The other way is that should the market continue to sell down to 1.3, actually ends up breaking through it, also has to contend with this 200 EMA on the daily, which of course is going to be another event point, and there are plenty of them on the way down, not least of which the weekly, which has 2 in its place, and then of course there's this one just below. So there's a lot for this market to break through. And the logic of this thinking is that if it's able to break through the 2 EMAs that I've spoken about on the weekly, which is the 20 and the 50, and it's able to break through the 1.3 level and the 200 on the daily, then this market is all about selling. In which case, what I described on the 3-month about is this simply a big sell-off that followed that after a pullback is going to continue lower. So that would feed into that kind of concept. So at the moment, we are in an uptrend, but because of the amount of selling, the steepness of it, and the way that it looks on the higher time frames, there is some degree of bearish momentum in this market. It's just a question of whether these particular factors that I have described actually can hold this up. So the other way that this could go, and it's a little bit more difficult to describe, as I've said, the other way that this could go, and I think actually I don't normally go down to the 4-hour, but I'm going to on this occasion because it might give us a little bit of information. Potentially, we could find we need to make a little pullback, sell off, find a bit of support down at the 1.3 level, which then starts this consolidation process whereby we then end up turning towards the upside and then getting towards the 1.38, 1.33 area. And as I said, 3270 was where I thought it might be of interest. There's also, I think this is probably something we should bear in mind, the 200 on the 4-hour, which also pulls into this little bit of a floor here. So this is also another one. So I'm going to give you 3 full levels of possible pullback areas. And in fact, I'm also going to say this might be one. Depends on the depth of the pullback. If it's a really powerfully selling market, the pullback will not be that strong. But theoretically, a pullback into the 10 could produce pick up enough sellers to get down to 1.3. Then we see perhaps a process taking place where it starts to move sideways and consolidate and not be able to break through this level. If this ends up being support, then we may find that the subsequent buying period will be deeper. So we're looking at potentially connecting with the 21, which I'm estimating at this moment is about 131. Let's say 50, 131.50. Then there's around number 132, which is here. That's mildly arbitrary at this point. Actually, no, I'm going to restate that. That's not mildly arbitrary. There's actually an area here where the market has been before and it's been a bit of an issue. So 131.50, 132, and then into the 200 as potentially resistance, combined with this structural point here, just here to the left, which would then also give us, if I can read that, the 1.3230 level. And then there's possibly the 50 as well. So that potentially might produce the deeper pullback that we need on, say, the daily time frame or even the weekly, in order to provide us with the opportunity to perhaps attack this level again, even after we've been down to it, found support, pulled back, second attack. So this is a very long kind of process that I've just described, and it may well take a good couple of weeks to do that. So I'm just talking through an idea of how this might work out. Now, the other side of it, of course, is that if this just sails through, then everything I've said is basically implying that everything about this market is a sell-off. And if that is the case, then we are just looking for the next levels of support. And I estimate the next levels of support in that case would be 128, should we slice through this market. Otherwise, it's more about consolidating, pulling back to re-attack this level. But at the moment, certainly looks like the bias is towards the bears. Okay, so let's now go to Aussie and talk this one through. And again, I want to go to the 3-month because I do think there's some relevance to it. I'll just lose this symbol list. get a bit closer. So similar kind of situation again. I have to say that having these quarterly charts is actually really rather helpful, and I feel a bit unfair showing you these, but anyway, there's something to think about. So carrying on, 20 EMA straight into the quarterly bar, as I said, that would have finished on at the end of September, and bar pushed straight in, sold off, back down, and this is where we find ourselves starting at the moment. So I like the cleanness of this reaction. Everything about this makes sense. This is a market that was selling off very steeply and then started making higher lows into a flat horizontal, obviously, and eventually broke its way out by the process of making higher lows into this 0.77 area, which I was talking about constantly as being the line in the sand that the market needed to break through. We eventually had a breakout of this area, and that gave the market a lot of momentum to push into the 20 EMA on the quarterly, which ended up being at the 0.81 level. Although the psychological level was 0.8, ended up being the 0.81 that it went to, and that's probably because there was so much momentum in this market that it just actually steamed straight through what should have been a psychological kind of obstacle. Ended up just breezing past it really and heading straight for this 21 EMA. Okay, so now let's go down to the monthly and see where we are with this. So we've got the 20 on the 3 monthly, and we've got quite a few issues here going on at the moment. And so really, once you see the number of obstacles that the market's trying to deal with, it's no wonder that it's been selling off. So we had a good momentum bar. We've, for the first time, got well above the 21 and the 10 EMA on the monthly chart, and crashed straight into the 200 EMA and the 50 EMA, coupled with the psychological level of 0.8. Now, what I like about this is that this is ultimately the close level. We have got as high as the 81, but everything has ended up closing below this level. So this, for me, as I say about certain things, this is the line in the sand. So we've been selling off ever since, and we're now at the support zone, which is a combination of things. And for this level, although I've always talked about 0.77 being the key level, there's also a bit of a zone aspect to this. Because of the amount of times that the market started to break through, it started to create a secondary support level, which is the 0.7740 level, which also happens to line up quite nicely with this 10 EMA. So if you like, there are a couple of ways of looking at this, not dissimilar from GBP, to be perfectly honest. But this is where I see that the market needs to connect to in order to make a decision. It's currently sat on a bit of support, which makes sense. There's nothing wrong with that. Will we get a continuation to actually test 0.77? Well, we might be able to get a bit more of a read on that by looking at the lower time frames. But for now, there is some support that's certainly in place, and support that's coming up underneath. So let's see what we see when we look at the weekly. Similar kind of thing. We're kind of in mid-air here. It's just a support level that's holding the price in place. As you can see to the left, we have this structural support level where the market did go to, and has actually over time provided this zone as I've been describing. So we have tested into this. In fact, that makes an awful lot of sense that you would have a market that tests into a previous structural level. The market does it constantly, and it's also why we end up with horizontal support and resistance. Do we have a sell-off opportunity here? Just looking at the weekly, in terms of actual price action, there isn't a great deal of reason why there shouldn't be a continuation. This is a continuation bar. It's got a little bit of a wick and it has got a little bit of a tail, but theoretically this could continue selling. There's nothing to say about this that this is a heavily defended level at this point, certainly not from a price action point of view. So would we possibly see a sell-off down to 0.77? It's feasible. So we hope that we can look at the daily and the 4 hour to see if that's on the cards. But as I say, this is the next level of support. So that is where I would consider that if the market isn't going to make a play to move to the upside from where it is, then it needs to test 0.77 in order to do that. So quick look at the daily. Now the daily is giving us the kind of bar that I've just described that I would rather see. What is slightly awkward about this is that it's doing it with a 200 EMA just within a stone's throw. So do we need to get to this? Because EMAs, all MAs, to some extent are magnetic as well as repellent, and this is something that we need to remember, because for a lot of people who are entering and exiting the market, they make perfect entry and exit points. This being an entry point, this potentially being an exit point. Although perhaps a lot of people who were selling this market might have thought this is a safer exit, hence you get the amount of buying as all the exits are taken out. It pushes the price back up. What is a bit tricky about this, and it's the kind of price action that describes potentially a push up. The sell-off from here was not as deep as it could have been. As you can see, there's a low here, and the next low is not that far away. If you see this low here and this low here, there's not a great deal of distance between them, which means that it couldn't push as far as it could have done. It was a short-lived move, and if it's a short-lived move, it could mean that the momentum in this market is stalling slightly. So that's one side of it. The other side of it is, do we need to see a little bit of a push up into this support slash resistance area at basically 78? Do we or do we need to get back into the 10 EMA, which I don't actually envisage. I think it's going to be more about this point. So then do we just get a bit of a consolidation and it sort of trickles down and eventually connects with the 200 and the 77? This is where it gets a bit tricky, because at the moment we're not overextended, but what I am seeing is that the momentum to the sell side has waned slightly. So that's the thing to take away from my description about all of this. And we might get a little bit more information if we look at the 4 hour. So 4 hour says this looks to me more like a tiny consolidation at support. So this is potentially an area. This is a price at 0.7740. This is an area where you could have more buying orders, hence why it starts to go sideways like this and you have bars lined up like a fence. So this is where we have to be a bit thoughtful, that if this goes on long enough, on the 4 hour, on the hourly, if it goes on long enough, then we will see more buying we see more moves to the upside, simply because it can't go lower, and if it can't go lower, it will have to do the opposite. So at the moment, I am seeing that this support level is, for the current time being, the one that's being respected. So we've got to bear that in mind. Do I think this could go lower? Well, looking at the 4 hour, we may actually get a repeat of this whole process, which is that we need to go sideways, have a bit of a deep pullback, connect with the 50, make a sell-off, which then gives us a new low, but it's not a deep low, and it actually tests into the 77. So this is one way that it could go. But I would be aware that this is possibly going to get stuck at this area, and stuck long enough, it will start to buy up, which would then potentially give us a deeper pullback along the lines of this one and this one here. So that's the way that I would read Aussie. Okay. Sorry I couldn't be more definitive. Sometimes I can, but there's a few occasions where the market gives you rather more variables than usual. And it is a little bit awkward, because had it got into the round number of 0.77, that would have been a bit of an easier call. But at the moment, there could still be a process that needs to work out how to get to here. And that might mean going sideways, pulling back to sell off again, or it might mean that we sell off a little bit here, go sideways, and then pull up. So watch out for how this works out, but at the moment this is the support level at 7740. Okay, all right, thank you very much for listening. I look forward to speaking to you next week. Bye bye.